Today we're going to cover the powerhouse of Ethereum. Yes, Ethereum, one of the best, biggest blockchains, especially in the DeFi space, decentralized finance. We love Ethereum and the innovation. But today we're going to look at the technicals, right? The psychology of the markets. Forget the fundamentals. Forget layer two. Forget, optimism and optimistic roll-ups and so on and so forth. Staking. We're moving to ETH 2.0, proof of stake. Da-di-da-di-da. We want to know, how do we make money, Jagir? How do we make money? Well, we want to look at the psychology of the markets, the pattern recognition when it comes to Elliott Wave and Fibonacci, where we can look at high probability setups. So you ready? Are you ready to dive in? Well, before we do, let me remind you who I am. I'm Jagir. I'm the extraordinary venture capital opportunity, how to invest like a pro author. I've been trading currencies for over 15 years, and I bring that knowledge and wisdom to the crypto markets because no one is doing this level of high level technical analysis. So do share this stuff because this is gold. Because I was featured in the book, the best-selling book, High Probability Trading Strategies, back in 2008. And I bring that knowledge and that wisdom to you. So let's dive in. And by the way, if you love today's video, like, subscribe, hit the bell notification. Let me know what you want and don't want. Because I'm here to serve you. And if you haven't taken my free crypto trading masterclass, is in the link below, because I covered the theory of what I'm talking about today. Because if you're brand new, and even if you're not brand new, this stuff is high level, but I cover it in layman's terms. So the crypto trading masterclass is in the link below. It just gets you up to speed as well. So Ethereum, a few weeks back, I did a video saying, was coming up to this wave here, this movement, beautiful movement to the upside. And I said, guys, be wary. I said, this looks like a wave 5 of a 5 of a wave 3. In fact, it was a wave 5 of a 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 3. Right. When you see that kind of panic buying, this move to the upside for a fifth wave is inevitable. You're going to see a big correction. Inevitable. Now, I thought it was going to be a bit earlier, but the market overextends. And that's why you want to know the fact that we don't have control of the markets. You don't have control over the markets. The markets are going to do what they're going to do. So we have our projections. We trade based on high probability. But when we're taking our profits, you have something called a trailing stop loss. So when the market does overextend, you want to be in that overextension and control your stop loss and let the market exit you, which is a bit more advanced strategy. I cover some of those principles in my crypto trading masterclass. So we did get the correction. Like, we had an immense correction to the downside. It was like boom. We went from, I think the high was 4,000, just under $4,300, right? So it was immense, beautiful move to the upside. And then it came all the way down to $1,728. Wow. I suppose that 50-60%. It was an amazing move to the downside. But if you've been following me for a while, you've taken my crypto trading masterclass, you will know when it comes to Elliott wave theory, corrections have how many waves? As a minimum, it's 3. Always anticipate a minimum of 3, right? And corrective waves have a particular pattern. Bullish waves are they're like impulsive, or they have a 5-wave structure, and corrective waves overlap and they have like a 3-wave structure. So what do we see here? Like, just looking at the price action, even if we just got rid of all the noise or even all the labeling, get rid of the indicators, just this price action, right? Well, this move to the downside is like a first wave. It's like, it's like, even if you just look at it in layman's terms, you don't even have to be experienced at this just to look at it and go, let me just get this arrow. Go look. Oh. Okay, we'll do it like this anyway. That's the first wave to the downside, right? And we label that as an A, right? There's nothing that would indicate to us that there's 3 waves within this correction. It's just boom, right? So we count that as wave A, which is the first one. So what do you anticipate next? Well, we anticipate the second wave, which is normally a wave B, and wave B tends to have an A, B, C. So that's what I'm seeing over here. So we should anticipate, because look, ignore that as Ethereum, ignore that as a powerhouse project, ignore that institutional money is coming in, ignore that Visa is now settling on the Ethereum blockchain on USDC, ignore, the last few projects that I've launched on Ethereum, ignore that it's the powerhouse smart contract leader, the category king. Yes, it has competitors such as Cardano and Polkadot and Kusama, and now we've got Binance Smart Chain, and we've got a few other things happening. Tron, I think Tron's going to be an undercover one, now that Tron Pad has been launched. Ignore all of that, and we just go, right, we just want to look at the psychology of the market. Doesn't matter about the ticker symbol. Doesn't matter that it's Ethereum. It's hard because you're going to hear the news. So I don't watch the news. You can hear the Twitter announcements. We don't watch that. You can hear all the other YouTube influencers saying what they believe about Ethereum. You know, it's going to skyrocket 10,000, 5,000. Hey, look, let's just look at the psychology of the markets, because you need a system that you can apply practically, objectively, and consistently. And if you don't have that, then you're just going to be an emotional wreck trying to buy, sell, take profits, not take profits. Should you hodl? Should you sell? It's too confusing. Whereas here, we have this beautiful chart pattern and it represents the psychology of the market. So let's just bring back the data on the charts. So we've got some price targets, but you will understand now, clearer than ever before, more than most individuals, that will give you an edge. And if you find this video helpful, share it. Like if you know people that are looking to buy Ethereum or have Ethereum, this will just help, because what people should know is that we may, with a high probability, and look, I'm not in the business of being right. I'm in the business of making money. I'm in the business of helping you making money. So I got a question mark here. I got nothing against it. I got nothing against Ethereum doing this, right? Love for it to do that, yeah, because there'll be massive opportunities. But the probability says it's likely to do this. That's the probability, right? So now there's shorting opportunities, because there's a relatively big move. If you look at the price today, it's 2,700, and down here is around $1,500, $1,700. So we should anticipate a move to the downside, typically 3 waves. We haven't seen it yet, no. So, you know, we want to look for short positions. But if it does make a move to the downside, if you're holding Ethereum, just embrace the movement. If you're not selling, which is a good thing, or if you are selling and you're trading, then you might be, you know, just have a better viewpoint of what's likely to happen, because we want to make objective decisions based on what's likely to occur. But if this does occur down here, then we should see a final wave 5. So this is a wave 3. This will end up being what looks like a wave 4 down here. I haven't labeled it, so I can just label it. I would put it in like this. If I just use it here, in fact, I'll do it like this actually. Sometimes there's a shortcut. The shortcut is this. We just copy and paste, drag this down here, and I'm gonna now put this wave 4. And actually up here, because this is now done a big move to the downside, we can remove the question mark. But we want the question mark on the wave 4 though, because that hasn't been confirmed yet. So there you have it, right? Really clear cut price projections. And it's to help you make objective decisions, because you're in the business of making money. Trading is like any other business. You have to make decisions based on the information that's available. This information is telling us something. It's telling us, hey, Jagir, Elliott Wave theory represents the psychology of the markets. Optimism, pessimism, fear and greed, fear, uncertainty and doubt. FOMO is all baked in. All the global players, the retail and the institutions, is all baked into the price action. So more often than not, the price, you know, markets are going to do what they're going to do, but more often than not, we always want to go with the probability that we anticipate 1, 2, 3 waves down. This is an A, B. We should see a wave C down. If we don't, we don't, but we want to go with that premise. So now you have a clearer picture on what's likely to happen with Ethereum, regardless of how much of a powerhouse it is, and regardless how it's going to change the world, and, you know, all these beautiful things that are happening in DeFi, where you can, you know, you can loan against your Ethereum, you can stake the total value locked of Ethereum, and the liquidity, it's the liquidity staking in Ethereum. There's so much beautiful things happening, but we want to kind of do this and go, oh, this, more like this, because the news can be confusing, because the chart pattern might be saying one thing and the news is saying something else. You want to go with the chart pattern. I don't watch the news, right? Often, even when I projected my April 19th video on Bitcoin's likely to really hit that big correction, and when it occurred, I don't watch the news. It was only other people telling me Elon Musk's tweet and so on and so forth. But we projected that before the tweets, before the China FUD, before this, that, and the other. And this is the same. We're looking at this. So there might be. So now what we're going to do, and we'll do this as an experiment, right? This is live. This is, what's the date today? Today is the 7th of June. I'm recording this at 9 a.m., which I need to be on a phone call. So I need to wrap up because I need to be on a phone call. This is TN. I got a phone call with TN, who's my director of operations. And yeah, at least I got an excuse, right? I was recording a video for you on Ethereum. We have this information, but sometimes there'll be a news announcement and the news is negative, has this negative bias, and it will catch on and latch on to the negative news, and it'll be forecasted, and we'll see something happening like this. So there you have it. If you like today's video, hit the like button, subscribe, hit the bell notification, take my free crypto trading masterclass, which talks about the concepts, my 3 top secrets on trading all markets, but especially the crypto markets. Like, subscribe, share this video, share the love, and I will see you very soon.